Welcome to Crypto TV. I'm your host, Ornella Hernandez, and it is time to recap news that you may have missed from the Web3 world from the past week. Coinbase also gets sued by the US SEC a day after Binance. And El Salvador wants to use its volcanoes to make Bitcoin mining sustainable. And please stay tuned for our two special guests today who will discuss what's going on with Binance and Coinbase. Let's get started. So first it was Binance, and now it's Coinbase. The US Securities Exchange Commission, the SEC, dropped its hammer on Binance, and the next day the target became Coinbase. The SEC said that Binance offered the sale of securities without a license, naming popular tokens like Sol, Mana, Sand, Algo, and Matic as securities. It did leave out ETH, however, out of its statement. And it also accused CEO of Binance, CZ, of transferring customer funds into third-party wallets, very a la Sam Bankman-Fried. Binance responded that they are disappointed and disheartened because they have actually cooperated with the SEC's investigations, and that this type of complaint against them is an example of the Commission's misguided and conscious refusal to provide much-needed clarity and guidance to the digital asset industry. They said this in a blog post on the Binance website. Then, the SEC issued a similar complaint against Coinbase, alleging that the company was operating as an unregistered exchange and broker, and that 13 assets listed on its platform were considered crypto asset securities. The regulator asked that the exchange be permanently restrained from doing so. Basically the same as Binance. The difference is that Coinbase is an American company while Binance is not. And Coinbase CEO Brian Armstrong argued that the SEC reviewed Coinbase's business back when it started and then allowed it to become a public company in 2021 with an IPO. But they conveniently leave this out of the court documents. Armstrong also tweeted that there is currently no path to come in and register assets as securities, and there lies a problem. He also stated that Coinbase is proud to represent the industry in court and to finally get some clarity around crypto rules. I mean, we're already going through a bear market. And now statements like this one from the US government are making new users very doubtful of crypto. There's a lot of FUD going around. I think that in times like this, it's important that the community sticks together and stays strong. And I mean, to make matters worse, now 10 state security regulators have formed a task force in support of the SEC's initiative. But hey, nevertheless, Binance carries on, and less than 24 hours after this complaint, they launched Bitcoin NFTs on the Binance NFT marketplace. So the exchange NFTs marketplace is the latest contender to step into the Bitcoin NFTs ring following Magic Eden's support for the same. Users can now buy, deposit, withdraw, and list specific NFT collections from the Bitcoin blockchain, such as Bitcoin Bandits, Bitcoin Frogs, Bitcoin Pizzas, Bitcoin Punks, Bitcoin Wizards, Block Legends, etc., just to name a few. Binance also recently launched a new feature that enables users to borrow crypto while using their NFTs as collateral. This service is called Binance NFT Loans, and it's only for blue chip projects for now. Staying on the topic of Bitcoin, let's turn to mining. I know it's not the most exciting subject, but please bear with me, especially if you are an environmentalist. The Bitcoin-friendly nation of El Salvador is trying to implement sustainable mining, and it is doing so with geothermal energy. That is energy produced from volcanoes. And in El Salvador, there are about 30 volcanoes spitting out geothermal energy regularly. So the nation wants to harness all that power to run its mining operations. Plus, there's a new $1 billion project that's investing in solar and wind energy to create one of the world's largest Bitcoin mining farms in El Salvador. And Tether, the stablecoin user, is one of the main investors in this project. Exactly how much they put in has not been disclosed. And there are other backers. Now, the project is named Volcano Energy. It hopes to establish a renewable power generation precinct in the region of Metapan, utilizing solar and wind energy to power Bitcoin mining operations. The initial capital raise for Volcano Energy, which aims to develop a 241 megawatt renewable energy park, and it plans to consist of 169 megawatts of photovoltaic solar energy and 72 megawatts of wind energy. Tether's chief technology advisor, Paolo Ardoino, expressed the stablecoin issuer's commitment to investing in both renewable energy products and mining infrastructure. The CEO of Volcano Energy, Josue Lopez, envisions the park becoming a leading example of Bitcoin mining being powered by sustainable resources. This is just one example of how the community is converging with sustainable practices with cryptocurrency mining, which has sort of had a bad rep because it takes a lot of energy to create its coin, to create any coin. But El Salvador is challenging this perception, and it shows just how committed it is to Bitcoin and to the greater industry. And it's setting an example for other nations, I think. What do you think about the Volcano Energy project? Think that we can make Bitcoin mining sustainable with geothermal energy? Please leave your thoughts in the comment section below. Now, stay with us, because after this commercial break, we will welcome two special guests who will give us their views on the US regulators versus crypto exchanges.
In a world transformed by technology, where the boundaries of possibility are shattered, a new era emerges. Welcome to the future. This is Web3 TV.
Hey guys, welcome back. Joining me at the desk today, we have Toby Young from CST Accountants and Advisors, and we have Leo Vigna, the CEO of Vulcan Link and Owl Protocol. So this is exciting because we have two guests today, and we're going to do a little debate on the current news. But first, let's do some intros. Let's keep it brief, guys. If you can just summarize maybe in a few sentences who you are and what your company does. Okay, let's start with you, Toby.
Fantastic. Thank you very much, Ornella. My name's Toby Young, as you said, CST Accountants and Advisors. We're a team of TradFi accountants, been in business over 30 years, that got blockchain certified a number of years ago. We help Web3 entities bring their business back to the traditional anchor of the business world in terms of structural advice, tax advice, and ultimately accountancy as well.
That sounds very exciting.
But
all right, what about you, Leo?
My name is Leo. I'm the CEO of Vulcan Link and Owl Protocol. Vulcan Link is a blockchain node operator, so we run the nodes, Ethereum, Bitcoin, etc., and specifically Chainlink. So we provide data feeds. So the price of Bitcoin or the price of Ethereum used by decentralized finance. And then Owl Protocol is building templates to launch dynamic NFTs, so which are NFTs that can be used for utilities like memberships or gaming or loyalty programs.
Okay, all right. Thank you, guys. And now I want to start off with a little icebreaker, a little lightning round. I'm going to ask you this or that, and then you have to choose. All right, so let's start. Bitcoin or Ethereum?
Bitcoin.
Bitcoin.
Really? Oh, I go for Ethereum.
I was hoping we'd get a debate here.
Amazing.
Unfortunately.
Okay.
We can comment on it if you want, but
Yeah, why Bitcoin? Did you get into it really early?
So for me, it's not about when I got into it. For me, it's about what Bitcoin is and what it represents. I'm not a Bitcoin maximalist in any way, shape or form, but I believe should we have an all-out crash, there is a very good chance that 99% of digital assets or cryptocurrencies will die. Bitcoin will be left, Ethereum will be left, but I believe that Bitcoin would, at this present moment, last longer and be stronger than Ethereum would be in the course of time. Hence why Bitcoin over Ethereum.
yeah, I think that's a fair argument, right? Because the market cap, first of all, Bitcoin is significantly larger, so it takes much more volume to move the price. And also the fundamentals is Bitcoin is designed for as hard money. And so I believe strongly in the monetary policy angle, right? That's very important, and the decentralization of Bitcoin. Now, Ethereum is great. I work on Ethereum, right? So I'm not gonna sit there. I use Ethereum every day because it's programmable, right? And you can build cool stuff on it. However, there is a significant amount of control in the protocol, not on a technical basis, but the simple fact is that the Ethereum Foundation has a lot of influence, right? I run the nodes, so I know that whenever there's an update, there's never a debate. Like everyone's like, okay, we're updating the nodes. Versus for Bitcoin is much slower, so people complain about it, but that's also where its security comes from. It's much more difficult to change. So it's kind of people in software usually they like making updates all the time, but Bitcoin is designed and the design is completely the opposite, right? It's designed to be very stable in its technical and monetary policy.
So we like the stability and the fact that in case an apocalypse happens, we can depend on it.
Yeah, I mean. There's other factors I could have added in there, but if I did, Leo would have had nothing to say. So, okay.
That's considerate. All right. So then, do you guys recall what year you bought your first Bitcoin in and the price of it?
Yeah, it was about 2017. And I think I can say that. I'm not going to go to jail. I bought a fake ID because I was going to college.
I had one too, don't worry.
Yeah, so that was cool. I was like, okay, nice. And then a year later, I learned more about not Bitcoin specifically, but more like Austrian economics and libertarian theory. So that was really interesting about like gold and stuff like that. And then I also did ETH Denver, which was a hackathon. So I learned about Ethereum there. So that's how it kind of got.
You're a coder yourself?
Yeah, I'm a developer originally. Yeah.
Okay.
So I think I was 2016.
Okay.
May have been early 2017. I didn't need a fake ID. If I did, it would have been one to make me younger.
These are US problems.
Yeah, no, absolutely. I was based in Dubai at the time, so no problem doing it. And I just sort of decided it was time to go down the rabbit hole as opposed to the theory. I'd been talking about it since 2013. It was actually time to get involved and everything else.
So you were really early on in the Web3 space.
Oh, well, there's talking about it in 2013, and then there's actually doing something about that. That took me another 3 years. So it went from looking at what happened with Mt. Gox or Magic the Gathering, depending on how you want to refer to it. But
did you lose some money there?
No, I have nothing in it at all. But I followed that very, very closely. I've been in finance all my life, in traditional finance. And so I followed that story because I saw similarities with traditional financial scandals. And it was then over time that I was like, it's great doing the theory. What about the practice?
Yeah.
Let's go down this rabbit hole. And at the time, I have to say, it was one of the scariest things I've ever done.
Buying it?
It's not just the buying it, because you're not actually buying anything. You're just buying Coke, right? You don't have anything tangible, but it does have a value.
Right.
And the value is what someone's prepared to pay for it. So, yeah. But thankfully, it was before the run. I've been in and out a number of times since.
So you're used to ups and downs in the market?
Not just ups and downs, but the horrendous experience that being your own bank is. And I wouldn't wish that on anyone.
Do we want to get into maybe some horror stories? From our experiences in the crypto world, scams, hacks, big losses?
As in personally?
Yeah, or personally or from the companies.
I can get into it. I mean, I have a fun story, which is kind of original. There's a lot of people that, have lost wallets and stuff like that. But me, I lost money where I was just programming with Ethereum. And I was gonna, I'd programmed some stuff that I wanted to automate, right, in my company. Essentially, with Chainlink, we get paid in the link tokens, but then we have to send transactions to claim the money. And I was trying to write a quick script, I was like, oh, this is easy to do everything. And then you have to set the transaction fee, right, the gas price for your transaction. And I called an API that would, a data source on the internet.
What exchange were you using? Or what
I was using it was just like Ether gas station. So that they're fine, they're great. But I did the math wrong because instead of dividing by 10, I multiplied by 10. Okay. And then I paid like $4,000 in gas fees. So the miners were very happy to get my transaction.
I'm sure.
That must have been the fastest transaction on Chain.
Oh, yeah. Next block, it was confirmed. That was like, I was like, and I saw it, I was like, oh, shit. It's too late.
Well, you live and you learn.
Well, yeah, you learn. Next time I was like, okay, I'm going to triple check everything when I do it. That's kind of a general rule, I think, in crypto.
Yeah.
Whenever you're doing a large amount, it's a good idea to maybe send a small amount first and see, okay, I received it, I did it properly, then do it a second time.
Yeah, no, that's good advice. That's happened to me where a friend of mine had his own NFT projects and I thought I was on the official site for it. And I was like, I don't know, in a rush to do it. And I'm like, I'm just going to buy the NFT. And it turns out it's fake one.
Yeah, whenever someone puts pressure on you or trying to make a decision, that's like a marketing tactic. Don't, to get you to not appealing to your emotional side of your brain over the kind of more rational to that is going to think with reason. So always take your time.
Totally. What about you?
So for me, it's probably not buying enough early enough, right? So
well, but Hindsight is 2020.
Honestly, everyone is an amazing trader with hindsight. Nobody would ever lose money.
Right.
Selling out too early. And then if we look at 2017 and 2018 and 2019 and 2020 and 21 and 22, the number of just absolutely terrible altcoins that were bought on projects and whatever else. But I do have a favorite project. I didn't invest in it.
Okay.
But I do have a favorite project. And it wasn't a scam, right? The guy set out and he built a token. It was called Useless Ethereum Token. And he said, I'm going to take your money and I'm going to buy computers, smart TVs, and other things for my house. That's what it said on the website.
Okay, that's very transparent of him.
He raised $250,000.
People just gave him money?
People just gave him money. And so it rumbled on, and it was previously listed under UET on CoinMarketCap a number of years ago. And he was still tweeting about it. And he's like, I don't get why are people still trading this. I've told you what I'm doing with it. I thank you all for the 17 flat screen TVs, 3 laptops.
Oh my God. Did you know about this?
I did not know about it.
And he then went on to say, maybe I should do another token. And I can still see the tweet. And at the end of the tweet, it was sort of the emoji. It wasn't even an emoji. It was the computer sort of... I can't even think of
Like a programmer? I mean,
yeah. And of someone doing that. Like, what are people doing? And that just summed everything up. The guy was completely transparent. No one could
for the memes.
stealing money. Stealing money. It was a meme before the memes. It did eventually get delisted.
Oh, okay. Okay, good.
But for me, that was a great story because...
And you just watched that? Like, people just giving their money away?
That summed up the memes before we had the memes, right? Before people knew what Doge was. Before Shiba or Flocky were even a twinkle in someone's eye.
Yeah. That's wild. I still don't understand how people just can part so easily. Yeah, but it's not like he was in dire need.
No, but Pepe's kind of the same at the moment, right? And this is rumor because I can't confirm it, I haven't seen it with my own eyes. Pepe's website says we're a meme coin, we're doing nothing.
Yeah, okay, if you have like
clear.
money to lose, go ahead. But like, you know, if it's like your next paycheck, maybe not, you know?
But this one I get, at least they said we're building nothing. But then people have just latched onto it. Becomes the marketing, becomes the community, becomes people pushing it, people saying this is the next big thing, which is great. But it's not great if it's a meme coin and people are actually losing their money, because every time a person buys it at a higher price, someone somewhere is eventually going to be losing money.
Yeah, just like, you know, I mean, if you have money to burn, you can buy a Rolex or you can buy this. I mean, it's up to you. You can do whatever you want, you know?
You can, but that doesn't help the industry.
Yeah, for sure.
No.
Well, especially where like, you know, most of the projects aren't really being that transparent. Like they're still selling you like, oh, you're going to be rich through this.
But people still buy into it. Well, I don't get it. I don't know.
To say.
This is the thing. You can say what you want on the internet. There's no one to verify it. You can say what you want within launching a token, ICO, IDO. No one is there to verify or say no. And even if someone says no, it might be one voice against thousands, which is to an extent where part of the regulatory angle comes.
Yeah, I was going to ask, because right now we're dealing with, at least in the US, Binance and COINBASE are getting sued by the SEC for allegedly offering what they call securities, so popular tokens that we all know and love. But why is this such an issue? Why are they cracking down now, especially on Coinbase, which I'm pretty sure went through, or they tried to go through the SEC when it first registered as a company. It is a US-based company. So why all of a sudden is the US just like hammering down on these crypto exchanges?
Cause and effects, Operation Choke Point 2.1 or 3.0, depending on which way you want to look at it. For me, the SEC maybe have gone a little bit too far. Right. How do you clamp down on people that asked for regulation? You didn't give them any, didn't give them any guidance. Coinbase, which is a listed security in the US, so they are regulated and abide by the rules of the stock market, listings and everything else. They said, what can we abide by? No guidance, or don't do this or don't do that. And then a year, 2, 3, 4, however long later it is, right, you did that wrong. I don't understand how you can do something wrong, assuming it's not already illegal, i.e. that we're not talking about murder, we're not talking about grand larceny, we're not talking about fraud, we're not talking about theft. We're talking about a mechanism they used that they asked for guidance on regulation on, and they didn't get any.
Right.
And they were like, well, if there's no regulation, there's no guidance. This isn't a no. So we can do it, right? And then years later, oh, actually, we didn't say yes. So.
Yeah, but you know that the US uses Coinbase to to sell the confiscated Bitcoin.
You mean the US government?
The US government.
Yeah, cool.
Yeah.
They've got to use something, but even then, I don't know how. I couldn't tell you the volumes that have gone through, and to an extent it's anecdotal, but in using Coinbase, is the government technically giving them the tacit approval to do other things? Because we're not saying it's the trading of Bitcoin, right? Everybody's acknowledged that that's okay. The case revolves around other factors, not directly limited to the trading of. So we're talking about some of the DeFi stuff, we're talking about staking, and that's where there's issues.
Okay.
But again, there's been no guidance. So how do you retrospectively look back on whether a token or a coin is a security or a commodity? The truth is, the regulations already exist. The SEC and whoever else it is haven't said, you know what? These aren't securities, they're not commodities. They're actually a combination of both. We have the existing rules in place for each of the individual asset classes. Let's go through this and build something that actually fits the tokens that we're looking at and the coins that we're looking at, because trying to force something into a pigeonhole here or a square peg into a round hole there doesn't work. And that's why we now have this issue.
Right.
Whereas if they sat there and said, okay, it is a security, it is a commodity.
Yeah, but they didn't know in the beginning. Like no one was able to properly.
You're right. Coinbase didn't know that, but the regulators who are saying, they haven't said it's illegal. They haven't also said it's legal. They're too busy trying to fit things into buckets when actually it's not one bucket, it's a combination of buckets. Something that I often say to people is when we talk about ICOs, we're talking about an unregulated IPO, right? An initial public offering has a prospectus. An initial coin offering has a white paper. Your white paper is an unregulated prospectus. It's not drafted necessarily by lawyers. It's not approved by banks. It's not approved by exchanges.
Right.
It's drafted by individuals who will then do a token offering and raise capital.
Yeah, I don't know. It seems to me just that the SEC and all the other regulators kind of want to just find the shit out of them, really.
Yeah, they want their bribes. They want their bribes. That's the real thing.
It's not bribes. It's kind of
it's settlement. What is
it's chasing the money. It's also saying you can't do things that we don't want you to do, but they're also not providing the
rules of control.
They're not providing the rules of engagement. So
I think that's assuming that they have good intent. And in my view, Gensler is a hypocrite. Like he was at MIT doing, I mean, I think everyone's seen that video. He was at MIT in 2018 saying like 3/4 of the market is in securities. And then, you said like the US government, it's the SEC specifically that has taken these actions.
Yeah, there are other regulators behind them.
There are other regulators, but my point is like, when the FBI is selling, the FBI sees the Silk Road's Bitcoin. When they're selling Bitcoin, they're like, we don't, we're like at the FBI, we can do whatever we want. Like, it's not like they care. I'm sure like the CIA uses like Monero and Bitcoin for like special operations. Like, I would not be surprised.
Yeah.
Yeah, they just, it might be like, look at what happened with, there's much more like belligerent actors in the crypto space, and they don't go for the people, the organizations that hurt the most people.
Right.
And often they sell. I mean, some people might like it, but in my view, like EOS, they raised like $1 billion on their they raised the biggest ICO ever, and then they didn't really deliver, and that was like pretty clear and cut case. Like it's much closer, like explicit versus like something like Ethereum, and they just settled. They did nothing went, and they just paid them. So they just want settlements, in my view. I think they're with the FTX, they're trying to.
Right. I think it all started with that.
I think that's the clear thing, right? They saw what happened to FTX. We need to do something. They've taken the time to try and build cases against other exchanges that would potentially have similar issues to FTX. And we're kind of too late because they haven't linked it back. They haven't said, look, we saw what happened here. We don't like this action. We don't like what's happening. This is not in the public's interest, right? If they said that and defined it, you'd go, we understand. But they haven't. They're like, right, we're coming after you for A, B, C, D, E. And people are sitting there going, hang on, why didn't you tell us that 3 years ago when we asked for guidance? Why have you not said that? Even now, you haven't said that this is wrong. You haven't written a law. You haven't given any guidance. You're just
right, they're just complaining about it, exactly.
And I have no doubt Binance and Coinbase aren't the only two. They won't be the last two. I'm sure we're going to see a range of exchanges come under the microscope because they all offer similar products that are going to fall foul of these laws. It then depends on US participation, because that's one of the big things for the SEC. It's US participation. They don't care that I might have used Coinbase as a British citizen living in the UAE. They don't care that I might have used Binance or even Binance US at the time, right? it's all about protecting the US citizens. It just so happens that the US is one of the largest investment landscapes with one of the toughest regulators.
All right, closing thoughts, guys. What do we think is going to happen?
What will happen? I think it will probably go to some settlement at one point. I mean, look at, JP Morgan was like storing cocaine on ships, like one of their clients, and like nothing happened. So like, I think that's a bigger issue. And what's more important in my view is like long-term to get people thinking about like, not just these actions, but like, do we even need the regulators? And what have they done that is good for us today? Because if you look at certain things like accredited investor requirements where like most people can invest or aren't allowed to invest in like the stock market,
right.
that's hurt people because like with inflation, like the only way to protect your assets is to like invest because like, things like equities go up. And that's why like you got a huge, I don't want to sound like a socialist, but like if you look at the numbers, like you got a lot of people that made a lot of money that were owning stocks, right? Like Amazon and stuff like that during the pandemic. But if you're just an average investor, you can't invest like, you're not allowed to invest like $10 or $100, right? So like you're cutting out people from like investing in the economy through those regulations. So we do need like some transparency, right? We don't want like a Ponzi scheme like FTX, but sometimes like it's a bit too strict and it cuts out access. And I think that's what they're trying to do with crypto as well.
Agreed. All right, we're running out of time. So any last words, Toby?
I was just going to say that I think Coinbase will settle and eventually move out of the US. I believe Binance will probably fight.
I think a lot of companies will follow suit and move out of the US as well. All right, guys, that's all the time we have, but please stay tuned and we have the market report coming up next.
In a world transformed by technology, where the boundaries of possibility are shattered, a new era emerges. Welcome to the future. This is Web3 TV.
What do you guys think about those discussions? The fallout of the Binance and Coinbase lawsuits have triggered major withdrawals from the crypto exchanges. Net outflows have settled to nearly $492 million from Binance and $105 million from Coinbase. People clearly want to get their money out. And since a number of popular tokens were mentioned in the SEC complaint for allegedly being securities, including Solana and Cardano, they're both significantly down since the announcements. And even metaverse tokens like Sand from the Sandbox and Mana from Decentraland have led declines this week as well. Now let's check to see how BTC and Ether are doing. So BTC is hovering around $26,000 while ETH is at $1,800. The market is bleeding, guys, and the US regulatory landscape is not helping. Hopefully there are better days ahead. Bitcoin NFT sales, however, exploded during the month of May, and they gave the NFT market a necessary boost, beating out other chains like Solana and Polygon in terms of total sales in USD. Ethereum still reigns, however, in terms of volume transaction and the number of buyers. Now, on the topic of NFTs, French luxury fashion house Louis Vuitton will soon debut a limited series of NFTs. But not just any NFTs. These are quite exclusive and specifically for luxury-seeking customers. Known for its leather travel trunks, LV created treasure trunk NFTs, and the collection consists of only a few hundred of them, and each going for 39,000 euros. These NFTs will be soulbound, meaning that they cannot be traded or transferred between individuals, so only the original owner of a LV treasure trunk will be able to use it to access exclusive customizable products, early releases of new products, and bespoke experiences, as they said. But for now, it's only available for residents in the US, Canada, the UK, France, Germany, Japan, and Australia. And they will have to first register on a waitlist. LV will then invite a certain number of registrants to purchase a treasure trunk with either cryptocurrency or fiat. So while LV has already gotten Web3 before with an NFT game that, by the way, I have actually played a lot on my phone, I have to recognize that this move is true to its luxury roots. It doesn't want to cater to the masses and onboard the many. Rather, it wants to be exclusionary, with its price point especially, and by only allowing a select few who want to commit to having a soul-bound NFT. I'm comparing LV to other brands like Gucci or Balmain who have definitely taken a different approach and just making sure they're not getting left behind in this race to Web3. But anyways, guys, that is it for today. So please remember to check out the rest of the Web3 TV YouTube channel. And this week, our team actually went to the World AI show, and I want you guys to check out the recap, so please don't miss it. And remember to hit the like button, click subscribe, and leave your thoughts in the comments section. Bye guys, see you later.
In a world transformed by technology, where the boundaries of possibility are shattered, a new era emerges. Welcome to the future. This is Web3 TV.